I opened a list of side hustles expecting to find the fastest route to an extra $1,000 a month. Instead, I found three numbers pretending to be income: revenue before expenses, profit before taxes, and money left after the work. Online, those three numbers get blended into one screenshot. That matters because the Federal Reserve found that 58% of all self-employed adults had income that changed from month to month. 22% said variable income made it harder to pay their bills. A side hustle can increase income and make cash flow less predictable at the same time. So, I ranked the 8 business models hiding behind nearly every side hustle headline from F to S using 5 tests: speed to first revenue, startup cost, control over price and customers, repeatability, and whether the income can grow beyond your own hours. The target is $1,000 in monthly profit before income tax, not $1,000 of sales. The examples are comparisons, not promises. A high rank does not mean easy. It means the model gives the owner more ways to improve the result than working another hour. F tier is pay-to-play task work. These are messages offering easy money for clicking, rating, boosting products, or moving packages. The Federal Trade Commission says some task scams make a small payment, often $5 to $20, to gain trust. Then they demand a deposit, frequently in crypto, to unlock imaginary earnings. The rule is simple: never pay to get paid. D tier is app-based delivery and driving. This wins one category immediately: speed. A person with an eligible vehicle can sometimes reach first revenue faster than someone building a product or audience, but gross pay hides the machine consuming it. Since July 1st, the IRS business mileage rate has been 76 cents per mile. That's an optional tax method and a cost benchmark, not your exact fuel bill. Still, it captures something screenshots ignore: fuel, depreciation, maintenance, and wear. The Bureau of Labor Statistics reported 2025 median hourly employee pay of $19.27 for couriers and messengers. Independent contractor economics can be better or worse, but they're not automatically 3 times better because the app shows revenue per stop. Fast cash, weak pricing control, vehicle exposure, and income tied directly to hours. D tier. C tier is content and audience income: YouTube, newsletters, affiliate links, and sponsorships. This has enormous upside because of one useful piece of content can keep working after publication. It also has the longest unpaid runway. For full YouTube advertising eligibility, the standard long-term route requires 1,000 subscribers and 4,000 valid public watch hours in 12 months. Reaching the threshold does not guarantee acceptance, views, or meaningful income. A creator can invest 100 hours and earn nothing, then publish one video that changes the curve. High scalability, terrible predictability, and slow first revenue. C tier as a side hustle. It can become an A tier business, but only after an audience exists. Flipping and reselling share C tier. This model is more controllable because the profit can be estimated before buying, but the sale price is not the profit. Imagine buying an item for $20 and selling it for $50. If shipping and platform costs total $8, the contribution is $22. 46 similar sales would clear the 4-figure goal before tax. The model works when you possess an information advantage. You know the category, can inspect quality, and can source below market value. Without that edge, inventory becomes money stored in objects that may never sell. Fast first dollar, moderate control, limited scale. C tier. B tier begins with asset hustles: parking spaces, vending machines, equipment rentals, antique booths. These look passive because the asset does some of the work, but capital takes the first risk, and occupancy decides whether the asset earns anything. If one asset contributes a hypothetical $150 per month after vacancy, restocking, rent, repairs, and payment fees, 7 assets are needed to clear the target. One machine in a bad location is not passive income, it's an expensive cabinet. Asset hustles can become repeatable, but only after proving unit economics one location at a time. B tier. A tier is recurring local services: lawn care, cleaning, pool maintenance, pet care, mobile detailing, or another visible problem within a small radius. This category is not glamorous, which is exactly why it works. The customer already understands the problem, the result is visible, and good work can occur. For 2025, BLS put the national median employee wage for landscaping and groundskeeping work at $19.19 an hour. A business owner may charge more, but also pays for tools, travel, sales, administration, insurance, downtime, and tax. Consider a $60 job with $15 in direct cost. The contribution is $45. 23 jobs come to $1,035 pre-tax. If 6 customers buy weekly, the target is crossed in roughly 4 weeks. The limitation is your body and calendar. The opportunity is turning isolated jobs into routes, checklists, subscriptions, and eventually a trained second operator. Fast revenue, direct customer ownership, strong repeatability. A tier. S tier is the productized recurring service. This can be local or business to business. Instead of selling anything you need by the hour, you sell one defined result for one defined customer at one recurring price. Examples include a monthly bookkeeping cleanup, newsletter production, short-form editing, appointment follow-up, or software setup for one industry. The math is why this wins. A hypothetical $500 monthly package after direct software or contractor expenses of $50 contributes $450. 3 retained clients yield a monthly contribution of $1,350 before income tax. It needs sales skill and reliable delivery, but it starts with a capability rather than inventory, and recurring clients reduce the need to restart at zero every month. One more number belongs outside the ranking. The federal self-employment tax rate is 15.3%, subject to its rules and income base, and income tax may be additional. The monthly profit target is therefore not the same as spendable cash. A side business also needs reserves for refunds, equipment replacement, slow months, and taxes. Removing every dollar feels rewarding until the first annual bill or broken transmission arrives. This is why I would rather see 3 recurring customers than 30 unrelated transactions producing the same profit today. The transactions prove somebody bought once. Retained customers prove the result was valuable enough to buy again. That lowers the unpaid time spent searching, quoting, onboarding, and wondering whether next month begins at zero. This is controlled repetition, not passive income. And control is what most rankings forget to measure. The ranking's not saying everyone should start the same business. If cash is needed this week, app work may beat a digital product that has no audience. If you already own an underused asset, renting it may beat buying equipment for a new service. If you have a valuable skill and can tolerate selling, a recurring offer gives you the most control. The real divide's not active versus passive, it's rented access versus owned demand. Apps provide temporary access to jobs. Platforms loan you their buyers. A durable side hustle gradually owns the customer relationship, the pricing, the process, and the reason people return. So ask a harder question than, which side hustle pays the most? Are you looking for a second job that stops when you stop, or a small system that becomes more valuable each time you run it? This is the Income Mission. Subscribe, because next we're ranking every major investment type by what it costs, what it can return, and how badly it can hurt you.